So we are back. Basically, like this is really the key because in an uncertain market where like you are not going to find your regular place, you can still make money. Not everybody is going to make that kind of a money. This is the email which I got just now. Is because if you build your strategy and build your skills, so it's not going to happen overnight. Let's be realistic, but if you build your skills, then you have a consistent source of income basically. So we started by looking at a couple of things, news, like as I said, like, look, if you want to be a successful day trader, focus on news because that's the most. So when you get a news kind of a thing, the news trade can become a trend play. That means like the stock keeps going up for that day. It can become a trend play, okay? Not all news plays become trend plays or like people come in with an expectation, this news is so good that the stock is going to go up. And many times what happens is that the stock goes up for the first 15 minutes and half an hour, and then rest of the day it keeps fading. This is very common nowadays because many of the earnings plays or many of the stocks which are very good news, they tend to make their new high in just like within the first 15, 20 or 30 minutes, and they fade. Why do you think this happens? So very good news, okay? And if you see on that, like intraday data is not available, the stock was up for in the first 15, 20 minutes. And by the end of the day, it ended up giving up the gains. So even on this day, it was up, but like ended up giving the gains. Okay. Or if you look at like say Shopify, very good news, right? Gapped up here and it spent rest of the day giving up the gains. Okay. Uh, Very clear, common thing which you will see, like look at a very good news, and it is up, and then it spent rest of the day going down. Okay, Generac up was up a bunch, right, and it was up like almost, and then the move starts spreading, and it just keeps spreading. Again, EH, similar kind of a thing. You can see DXCM. A couple of times it has happened, and this is just like few examples which I looked at it. It's so like basically and one of the reasons why this is happening is that everybody has figured out like things like PEETs and things like the post-earning announcement drift and all. That's like basically what happens in this market. What used to take 5 days or 6 days for that news to get priced in gets priced in instantly because there are computer programs and things like that which project based on this particular news. This stock should gap up this, go up this much, and they don't care. Like then they just keep buying, and then like something reversal happens and it just reverses. So it's very common kind of a thing. So your news plays when you find a candidate with news, supposing to, let's take our example again of GD as a news play, supposing based on what news comes out, supposing, okay. It can either become a trend play. That means like starts making a move in the morning and it goes up like say in the first 15 minutes, $5 and it hardly corrects and then it consolidates and it forms an anticipation setup on a 5-minute chart or a narrow candle and then it keeps going in the direction and by the end of the day, the stock closes at like $50 from where it started. That's a trend play. So some of the news plays, especially the one where like there is some sort of a surprise and before that the stock was not rallying big and things like that, you'll find that trend play, the news can become a trend play. Okay, so there'll be the stock will start going up early in the morning and any correction will be very small. So you will get like a move which will be like basically, so it goes up and if it corrects, it will correct like basically a little bit or it will just like go and it will go into a consolidation kind of a thing and then from there again it breaks out, again forms a consolidation and then it goes. Okay. Uh, Probably 2 to 5% of news plays will become trend plays most of the time. Maybe higher in certain market conditions. If you're coming out of a big correction and all, more will happen. But most of the time, that's what happens, right? While what is more likely to happen is you're likely to get fades. That means like whatever goes up in the first 15, 20 minutes big, and then you get a fade, and it can be the fade can be very deep also, and the stock may or may not go up for the rest of the day. A lot of time what you'll see is that there's very good earnings, but like the stock actually ends up doing nothing. It just fades throughout the day, like in Shopify for that matter. It just spent the rest of the day fading. So anybody who bought it as a gap up, even ring for that matter, for that day, it keeps fading, right? Or Generac, it gapped up and then somebody like bought it late. After that, it kept gapping up. Doesn't mean like, see, we are not looking at, we don't know at that day if this is going to happen. So if you're a swing trader, your view is different. But if you're a day trader, this is a very good move because yeah, if you don't get in the first 4 or 5 minutes or 1 minute or like based on the trend play kind of a thing, you just wait for the first leg to happen and you fade the first impulse move. This is very common strategy most of the time. That's why day traders are trained, especially they are told, those who are new, you don't trade the first 15 minutes or half an hour, stay out of the first 15, 20 minutes. Then if you're staying out of the first 15, 20 minutes, what is your strategy? Very logically, your strategy is to either fade that move, which has happened, or an anticipation kind of a thing on the 5-minute chart. So those are like, this, all these falls in the category of the same phase, okay? Now you have a news play and it goes up, okay? And it has a very orderly pullback kind of a thing, shallow pullback of only few percentage points or few dollars from, so if it is up, say $5 and it just pulls back $1, that's a very orderly, and then it sets up and then you buy a pullback, the first pullback buy. Obviously, you don't buy it after like a second, third pullback. You just like buy the first pullback kind of a thing, and that also works. Okay, fading a breakout. This works very well when like basically, especially this works very well for like stocks or levels where people are expecting it to break out and continue kind of a thing. Like say. For a stock which is like say which is highly followed by IVD kind of traders, okay, and based on their infinite wisdom or whatever wisdom they have, okay, they say, okay, this is this, and this is this, okay, and you buy it here, or they tell you, look at this, buy ZM here because it is like making a high, all-time high, okay, or like it's breaking out, like this is a curve, this is a handle, and then they buy, and then it fades. And why does it fade? Because when breakouts happen at an obvious level or where a lot of people are thinking about it, the smart trade is not to buy that breakout. Smart trade is to like anticipate that and buy somewhere in the consolidation and then like sell it to those people. So that is another reason why this happens. The same thing happens on intraday basis. Look, if you have a chart and the stock is setting up nicely as a consolidation, it goes sideways and you think like, look, boss, this is going to break out. Once this breaks out, you buy this, and next candle, what happens in the next candle? Fade. And then this kind of a trade happens, and this is what like really gets people like very roiled up. But this is a very profitable trade, especially if bunch of people are expecting breakout about $40, and as soon as it breaks out about $40, and within it starts to break down or a false breakout, the breakout starts fading. That's like a very likely to become a good trade. Why? Because then bunch of stops are here and bunch of people are trapped. Whenever people get trapped, okay, fast moves happen, right? And that's why this fade works so well, because people get trapped. They buy at the wrong time or things like that. And that's why like you get. So these are the possibilities when you find a news play. So when you find a news play, one, you can assume that it is going to become a trend play. So if you assume it is a trend play, then when should you be entering it? Early, OPG. The best entry will be OPG, right? In that case, like you just like take the risk and enter it early, OPG, or enter it in the first 1 minute, or enter it like whatever we want to, but earlier the better, because you're saying it is going to become a trend play, and the first part of the move itself will be most of the time the biggest move, right? So it's going to go up $5, and if you can enter on the OPG, then you'll make $5. If you wait for it to set up and enter, you might end up making $2. And if you're a fool, you'll enter here, right? But if it is a trend play, early entry is the best entry, OPG or the market, pre-market is the best. Now, if you cannot do that, then the second best entry will be some sort of a pullback or anticipation. Okay. And this is where like the strategy which I have recommended, which is like you look for a stock which is up $3 plus, okay, in the first 15 or 20 minutes on a 300K first volume. That stock, then you go on a lower time frame of 5-minute chart and wait for it to show you an anticipation or a narrow range kind of a setup and sort of NC, which is narrow candle, okay? And then you buy when it starts breaking out of that, and don't wait for the whole candle to form to buy. You have to buy like as soon as you see some sign of buying coming in kind of a thing. This is exactly what the videos which I have bumped up like has that. So it's like basically day one momentum and day two. These discuss the same thing basically. It means like it's part two of this, but that's how the dollar breakout you can trade it as an this thing, okay, or become an expert in low risk opportunity. This can be in terms of intraday or also. Now here is the problem which you're going to have. In current market, you're not likely to find this trade setup working. Why? Because there is so much volatility. Okay, so because you have such a high volatility, this setup is not really what you can trade today. Nice to know, but this is not a setup for this market condition. It's very unlikely that you're going to get a trend kind of a play and which will set up very nicely. Yeah, never say never, some will, but the probability of this kind of a trade working is very low today because the probability of this kind of a trade forming itself is very low because of the extremely high volatility in the stock market currently. But once volatility dies down, something happens, we start rallying and everything settles down, then this is your trend play basically where you are doing. And there's a bunch of information which is there about that. Here, all that you need to do for that is to like look at the bullish combo scan and scan it by $3. Obviously, at the end of the day, you're getting, but in the morning, you'll get only 3 or 4 candidates and look for something where the volume is greater than 300,000 and then go on a lower time frame. And on the lower time frame, wait for it to set up as an anticipation setup and then or minor pullback kind of a setup and then buy. The reason why you're not going to find this in this market is obviously because of the sheer amount of volatility which is there in the indexes itself. But if you can find something like that on an intraday basis, that's your best opportunity for a continuation play. So something like this, say, you're like the stock was up, and then this was a consolidation, and then it broke out, and then this was a $10 move. That kind of a play is what you're looking at. Okay. Unlikely to work much in this market because of the market being very volatile. Okay, so that's the thing basically. It's fine, I think, and it's for you only. Okay, so that's the either pullback or anticipation from a news play. Okay, that's the idea which you're looking at. In that case, really the news has to lead to the stock going up $3 plus for you to get interested. Okay, and why $3? Because anything lower than that, the range is too small for you to make enough amount of money. If it is going up $3 or $4 or $5, then the stock, when it makes the next leg of the move, is also likely to be $2, $3 kind of a thing, and as a result, you can make. Does weak structure short continuation play work in the market? For the same reason I told you, where like you have such a high volatility, is the same thing is not working so well. There is like a likelihood of that working. It's much lower. Some stocks do have that weak structure kind of a thing, and it does work. But many stocks may not have that kind of a thing. On Amazon, there was a weak structure short here. But many stocks are not because of the sheer volatility in the indexes. But if stock is going down, it still works. As you can see, regeneration, there was a weak structure short, this was a weak structure short. But here in this market, because of high volatility on the index itself, the underlying stocks are having high volatility. So it's difficult, right, to make in this current environment with a closed stop, basically. So that's on the news kind of a thing. Now, the Fed, when we are saying Fed, okay, there is one kind of a trade which works very well on gaps, where you fade gaps, okay? And there we are, let's look at that as a thing, okay? And especially when the market is bullish, okay? Whenever you have gaps, okay? You're going to get two types of gap. One is going to be a major gap, like which is like where the stock is up 5, 10, or 20% gapping up, right? And you're going to get minor gaps. The minor gaps is like less than 5% or 3% kind of a thing. Almost invariably on minor gap, the trade is fade, okay? Because when it like basically gaps up minor, there is like not major catalyst or there is no major catalyst. Your best trade is to try and fade that gap. Obviously, you don't just go and do an OPG fade kind of a thing. You have to wait, look for it to set up on a lower time frame and then fade that particular thing. But the biggest opportunity in gaps also is in things which gap down. So there is a bad news and the stock gaps down 20% plus or 20%. Okay. Shorting this, obviously this is a different market, but in a normal market, don't even need to ask who is the fool. You are the fool. Okay. Most of the time, you will see that when things fall down like that, what happens is the low post of the time will be established in the first 5 or 10 minutes, right? And after that, the stock is going to spend this entire time going up kind of a thing. On a bad news, if something gaps down, you'll see that, look at most of the time when it gaps down like this on some news, okay, the stock closes near the high rather than having a continuation short. And most of the time that gap down, this is a minor gap compared to like, and I can't find an example just now of like that, but why does that happen? And it will happen again and again. Every day it will happen that, look, you get a 20% kind of a gap down and that gap becomes like, it's just lasts for 4 or 5 minutes and immediately it reverses. And this is a very profitable trade. Whatever is gapping down, okay, anything which gaps down, sometimes like it's right from the first print of the gap down. So things were like, it was trading like this, okay, and it gaps down 20%. So it is 20% down. And within 1 or 2 minutes, it just starts going up. And most of the time you'll find that, look, and it will end. So this is the trend, which is like, say, stock is, and then it gaps down here, okay? And 2 or 3 minutes, it will go down and then it will have a violent reaction and it will keep going up and it will keep going up. So people get trapped basically, shorts like who don't have much of a skills, they short, they get trapped. That is one reason. But the other reason is, look at the selling exhausts itself and there are no more sellers. Okay, and because the market is structurally bullish, more bullish than bearish, whatever reason the bad news was there, supposing, let's say, look, there was a bad news on this stock, it missed earnings or whatever happened, okay, it got sold. Funds sold, whatever, but all of their orders were as OPG orders or in the morning, and as soon as their selling is finished, there are no more fresh set of sellers, and as soon as that selling is over, the stock just keeps going up. And this is such a highly profitable thing. You'll see it again and again happening on many stocks. I don't see an example of this, but like here, like in a stock gaps down, and it will like spend rest of the day going up, and it will end near the high. So this is one of the very popular strategies which is used by day traders. So when they're looking at new pre-market and they see gap ups, okay, uh, the enthusiasm is there. But if there is a gap down, and especially if the gap down is big, and especially if it is on a established kind of a stock, okay, the enthusiasm is very high because this is very highly profitable strategy, more profitable than a gap up many times because you can just wait for the selling this thing and then like in a buying comes in and then just like it takes the whole thing up basically. Very, very profitable. And can we find something like that? Let's see. Uh, Here, Amazon gap down. Okay, the gap. We don't have intraday data, but you'll see that look at from this gap. This is where the stock opened, right? This is a gap down, and it spent rest of the day going up because that's very, very, very common. Like this stock gap down, right, and it established a low, and then it went up rest of the day. It spent going up and closed in the top 10% or 20% of the range. And this is again and again you will see that things gapping down, instead of becoming bearish, you should be becoming bullish. And that's when you are a professional because you realize, I should not be shorting that. No matter how bad the news is, most of the time when something like that happens, is the stock has a tendency to reverse big and go up. And that's age and a big age. There are a lot of people, obviously, again, this is not a trade which you can do in this market. Okay, keep that in mind because the market is now different. Um, so a bunch of people, what they do is how do you enter this? They don't do BSLO. Most of the time what they do is like, say, if a stock is gapping down, like say, it's gapping down here, okay? They will put an order even slightly 20 cents or 25 or 50 cents below that gap down sometimes, or they'll just wait for it to like sell off and then buy in the first 2 or 3 minutes once the gap down happens. And many of them like sometimes like those they just buy and take a little bit of hit, it goes down and then it reverses. But this is basically a fade trade, which is like a gap down is faded basically. That's the classic fade trade, works very well. And a bunch of strategies people use. So supposing a stock is trading at 100 and it is gapping down to 80. Okay, so what they'll do is they'll put an order to buy at 78, thinking that there'll be a $2 more follow through. Sometimes you're going to get killed on this also. Any strategy you can get killed, right? And that's but most of the time it gaps down and then like an 80 and then it keeps going down for a couple of candles or one candle and 78 and then like suddenly buying will come in and the stock was at 100 and you and the stock might end up at 90 or 92 by the end of the day. So this reversal plays is very, very common and very profitable. Some people just do this. Okay. So this is again example of fade. So the way to find this is anything which is gapping down about 20%. Yes, who is this? Pre-market is what they will start monitoring. Either like they put an order which is lower than the gap or they are looking at. As soon as it shows strength, they'll get in very quickly. Facebook recently, let's see. Yeah, means here, this is what you're talking about, right? I mean, it gapped down here. This gap down was like 6 or 7%. Sometimes like large stocks, obviously the gaps will not be 20%, but like it gapped down and then the rest of the day it's spent going up for that particular day, it will be like that. After that, it might have a follow through, but most of the time when the things gap down, this is like really very common pattern, extremely common, and a lot of people trade this. There are a bunch of people who do this uh, at the open. So they're just looking at stocks which are down a lot. So let me just go through. Uh, how do you enter weak structure or strong structure? Uh, it's not really the stocks getting hit at the open. It's more like also if you look at if some a mutual fund had a position in say a stock, Facebook, supposing, and then it gaps down based on the news, they decided to sell. And as soon as like in a bunch of funds had decided that, but there are a bunch of funds who are looking at like who would have shorted it here also, and they are going to cover. There are a bunch of funds who think that because it has pulled back, it's a good buy. But the most logical explanation is that all the selling happens in the first 5 minutes at the open because they decided based on the news, we just want to reduce our position or we just want to get rid of our positions. All the selling happens at that moment. And after that, there are no more sellers because there are no more sellers. A little bit of buying, not a big buying, just little bit of buying just reverses the stock. And that's the market structure, which happens very common, okay? Uh, weak structure is basically something which is down $3 or $4, 3 or 4 candles in a row. And then after that, it has so here is a stock which is down 4 days in a row, 1 to 5 days in a row, 1, 2, 3, 4, 5. This is one day it has a counter trend move, which is just like a minor counter trend move because that was like an 1.68%, and immediately it follows through. That's a weak structure short. So you short on this day basically, and then it followed through. Okay, or like say you look at like an DA. So it's like in a down 1, 2, 3, 4, 5, 6 days in a row. There is this one candle which is a counter trend bounce. Next day it fails, so you short on this day. That's weak structure. Okay, you don't short like weak structure when a stock is already made a multiple down legs. So here is another example of weak structure, which is like basically stock was down. So 1, 2, 3, 4, 5 days in a row, you get so 2 days consolidation, and then it followed through. So a bunch of time it made the same trade like here for 1, 2, 3, 4, 5 days, 2 days of consolidation, and this is where you short, and that's called weak structure, basically, where you get a waterfall kind of a decline of 4 or 5 days, and then after that there is just a minor 1 day counter trend bounce like here, Simon Property Group, 1, 2, 3, 4 days down, there is one counter trend move, and then it fails, or it like sells up after that, and then it keeps selling off. There are a bunch of like weak structure. Okay. Uh, And where to find it is by running the scan called weak structure scan, basically. So here again, you'll see that look, there is a waterfall decline. Waterfall decline means every day it keeps falling. 1, 2, 3, 4, 5 days of waterfall decline. 3 days of consolidation, and this is where you short basically. So it works in any market condition, not necessarily only in this market condition. See here, 1, 2, 3, 4 days, and then just one bounce, and then like stock had a follow through, and how do you identify weak or strong structure? Please see the video I have bumped. There is a lot of discussion on that. That's more relevant not to this discussion. So let's focus on the day trading part of this today. So um, in order to find these news plays, the simplest methodology to find news plays is you can start by reading the news, okay, and start looking for setups, looking for things like, and you'll keep looking at news. You are going to waste a lot of time doing this, okay? Because the amount of news which comes out is enormous, right? So as a result, the best way to do this is to do the other way around. Like, don't start with the news. Start with a certain percentage move. So how you find these kind of setups is like you first look at something which is in post or pre-market, up 5%, okay, on 100K kind of volume. So that way you're not looking at like any 5,000 news items. You're looking at only these stocks. So probably there'll be 10 or 20 stocks which will be like that. Most days it may not be 10 also. It might be 4, 5, 2, depending on how it is, okay? And on those stocks, then you look for the news, okay? And then look for the likely impact of the news. So if it is an earning surprise, let's say, and if it is an earning surprise of 10%, okay, that is very good, right? Everybody is sleeping. Obviously, 10% surprise is no news, right? And that's like even grandma will not be impressed by 10% surprise. You get a surprise of 100%, 300%, 500%, 1,000%. Then that's like a news which is like going to make you mint you money, right? So look for something which is a big news. Similarly, like you get a biotech kind of a play, which is like but the stock after that news is up 6%, 7%, or 10%, that's big news? No. If it is a 40%, 50%, 100, 300%, then there is something, the news has some power in it, right? And a biotech's like on news, if it gaps up less than 40, 50%, that's like a minor league biotech, right? On a move. So you start looking at news and then start looking at what is likely to be the impact of the news. Obviously, earning surprise is one of the strong kind of thing which can lead to a trend days kind of a thing. Biotech, what else kind of a move? You're going to get an upgrade, downgrade. Okay. Now in upgrades, if it is an upgrade from say some D grade firm, okay, operating out of Florida, okay, it's going to move the stock a lot, right? As against if it is an upgrade by Goldman Sachs or Morgan Stanley or whatever the A-listed firm is. So that's how you go about finding the news. And then you have a candidate. So you went through this early morning, run a scan, which is a gapper scan, and which you can do it in IB, you can do it in any free software. There are a host of them, and the site which people are recommending a lot nowadays, that what Stock Chameleon or something has all that for free. So, or even if you can just, if you just go to NASDAQ site and do NASDAQ pre-market, you will get like a pre-market moves, not the, there are a bunch of tools. You don't need to spend money for this, okay? They are all like, yeah, the market chameleon. That's like a bunch of people have recommended this to me. I get my gaps from TI, Trade Ideas, but like, this is one which people use. And then, so after you do that, you have maybe 5 ideas or 6 ideas. Okay. And then look at like in a pre-market volume, higher the better. It's relative higher, means obviously Apple is going to have like always higher volume, but relative in terms of percentage higher volume. Price higher is better if I'm there. If you are like and have smaller account and you like trading small price stocks, then price might be your criteria to use. And that's your list. So you have 3 or 4 candidates, and then you're in game. Why Florida? Because for some reason Florida has the most lax laws in terms of what you can do in the stock market or what you can claim. So most of the shady brokers or the most of the shady pump and dump artists, they're all based in Florida. All these penny stock pumpers and so things and all, the direct mail which you get most of the time, it is coming out of Florida. Also, I think especially Boca, yes, because like old people go there, there are a lot of money and more like gullible people probably. What the real logical explanation of the explanation is the kind of laws which are there in Florida, which allow these things to get away without like thing. That's like the reason most of the pump and dump schemes will be from Florida. So, so here is like, then you have this, so then you have a choice. Like if you feel that, look, it's an earning surprise, there is a classic NTR, TMTR you play where there is a neglect and all, and you feel that this is going to be a trend play, then you'll play a trend. And if you're a good day trader, I don't think you're going to wait for the market to open. Most of the day traders keep telling me every day, you know, kind of bulk of the action or bulk of their money they're making in pre-market currently. So they start trading. They're not going to wait for the market to open, many of them, okay, unless they're doing very big size. So if there is a trend play and they find based on news, they'll be in it like as early as possible. Earlier the better kind of thing. And then there is a second type of people who say, okay, I don't want to trade the first half an hour or first 20 minutes for 15 minutes. Then those people are like waiting. They're like tigers or lion, which is waiting in the grass, waiting for the right opportunity. And what is their trade? Fade. So exactly. So they're waiting and they're waiting and they're sitting in the grass waiting for their opportunity. As soon as they see, if you look at this move is starting to lose a little bit of momentum, they will fade it and they'll make their money. Okay. So this is how you do it. Then there are more elaborate players who would have mapped out all the support resistance or like an R1, so R2, R3, and then they will like have their elaborate strategies. So that's something which like beyond my capability of explaining. I just like do simple things. So, but there are a bunch of players then, Fibonacci and Fibonacci fork and numbers and numerology and GAN and you name it. Uh, but you don't need to make it so complicated. You can just look at it and this straight basically. Something which is up is going to fade. So you see something gapping up early in the morning or gapping down. You start thinking, look, and it's going to fade. So and trade opposite of what started. So this was down. So you anticipated it is going to reverse. So you now it's in first half an hour it is up or 15 minutes it's up. So somebody thinks that this is going to fade. So he trades in this direction and so on and so forth. And that's the easiest play basically, which is basically either trend play or a fade play. Then there is the after like first half an hour is over, what is going to happen is the stock would have like if it was a trend play, what would have happened is the fade was not so successful, right? And the fade trades may not have worked out as well as the people expected because what really happened was like it went up a bunch in the first 20 minutes or 25 minutes and somebody tried to fade but like and it just faded for a couple of minutes or couple of percentage and then nothing happened and it just started going sideways. Then that's your hand play, right? Anticipation play. Then you wait for some sort of a breakout from this and then trade in the direction of the trade. Now it does fade, but it fades little bit. It doesn't fade as much as it just fades like say 5% of the move which it made. So it was up like $5. It just fades 50 cents, or it was up $5 and it just fades $1. So that's like around 15 or 10 or 15. And it just like goes and it just remains like that, like pullback. Then again, you have a pullback trade. Okay? And this is what like a bunch of people presented in the advanced boot camp. They're working people, but like what they do, and especially those who are in California, they feel like it's too risky to enter this first leg of the move, which many people feel, because you have to be very quick in entering. So that's why. So they wait for this pullback play to set up and enter when the pullback is there. Even Monis, who presented, also is primarily doing pullbacks. He's primarily playing pullbacks. So when it pulls back, then they buy that pullback in the hope that it will revert, or like they buy on a confirmation, or some of them just buy as a pullback and then it reverts. Okay. Yeah. So this is a very common strategy, and this is all this is news related. The other is, as I said, gap down, and gap down. There is an entire video which somebody made. I don't know what is his name. Okay, called Trading Gaps. Okay. And if you see this video, it's a very nice thing. Okay. What percentage fail, I don't know. Like, and it's like basically you don't know. Like, and there is no statistic like that. You just, a lot of time it is like, and basically you're toggling between 2 or 3 ideas which you had, and you see something which is like setting up nicely, you get into that. You don't even care about what is happening to rest of the market. So nobody can answer that question, what percentage fail. Okay. It's like how you make it work, basically. That's really matters. Okay. A lot of these things where like people are saying, oh, you should get a risk reward of 1:2 and 2:3 and all. I mean, yeah, in theory they make sense. In reality, a typical day trader, like our friend STKB 2009, was a very successful day trader. Okay, will be probably doing in a day anywhere between 20 to 40 trades. Okay, and something like him who is a scalper, his success ratio may be as high as 75 to 80%. Okay, because if you're a scalper, you need a very high success ratio for the scalping to work. Okay, his average profit on a trade might be just like $30 to $120. Okay, but because of 40 trades, that at the end of the day adds up to 3,000 to 5,000. That's how this thing works. 20 to 40, some scalpers, like the really heavy hitting scalpers, might do 60, 100 trades in a day. Okay. So per trade profitability will be like anywhere from like depending on what you target. If you target higher price, your profitability will be higher, but like they'll do a bunch of trades and like they'll have like say $300 profit in one trade, 120 in one, then lose like 60 cents, $60 in something, and then again they'll make $40 or things like that. And they're very good at like, see, the skill to this is to have very tight stop and realize if it is not working, you just get out without waiting for your stop to hit, kind of a thing, and also taking profit. I think easy around who was that? He will tell you that look, he takes profit very quickly, and that's the skill. So a lot of time people think that this is a failed trade, but it's like we take profits so fast that it's like it really goes into the scalping kind of a category, basically. Okay. So this is the news play where you can make money. Okay. If you have any question regarding news plays, I would answer them before going on to other things. That's not only the game in the town. News is really the one which bulk of the people play, but there are other games in the town. and I'll briefly touch on that. And none of these news play kind of things require you to have any software like Trade Ideas, or you really don't need anything. Okay, you just need basic tools. Free tools can, as long as you have a brokerage account, and free tools and some charting kind of a thing where you can get a real-time database kind of a thing. That's it, like basically. I don't use IV charts. I just use TC2000 charts. No IV charts. But obviously, I'm not really a heavy duty day traders. Those who are heavy duty, they have like a bunch of things. Then have most of them will have e-signal. Is Larry around here? If Larry is here, he will tell you like most of them will have either e-signal, or they have brokers. Some of them use platforms which are not IB platforms, which are like designed for day traders. In those cases, those platforms themselves have real-time data and things like that. We will be like it's costly. Like those platforms can cost you as much as $300 per month, and the execution is through those platforms. In those platforms, some of them have like things like you can trade off the chart and one key entries exit, but you can do a lot of that in IB, so that's almost possible. For gap ups, do you suggest buying within first minute, but after 5 minutes? Means my only advice for gap ups is, if you've done your work and if you have identified a gap up based on news, is there is only one right entry. That's OPG. Even before OPG, like pre-market is a better entry, but like then the risk is higher when you're doing pre-market trading. How does pre-market trading work? Pre-market trading is like, you just have to, it's there in your broker. Not all brokers offer, but like as far as IB is concerned, it is offered. You just have to opt into it and make sure that you go into the order settings and your orders are designed to execute pre-market. But realize then don't use that same account for swing trading, because if you put a stop and if you have pre-market orders like in a set as to be executed, you might get stopped out on your swing trading. So that's the thing. Yeah, I don't know who read that video, right? Can you apply same trade or gap strategy to trade index? I do not think you can do that. Indexes do not like really gap that much, and you cannot use that for indexes. There is a strategy for indexes, which is there in my last slide, which is intraday trading TQQ, but that's like on my last slide, which might not happen today. So news is the strategy, okay, for day trading. Everything else, there are many other strategies which people use, but those are not as profitable, or those are not really, some of them are slow moving, some of them are like things which are like, which gives them more control, and that is why they trade. But this is the most common kind of a strategy, and it works very well, used by 99% of the successful traders. It's called stocks in play or news plays. So if you don't want to do this, or you like or for whatever reason you don't think that is the right way to make money, then the strategy which you can use is $3, 300K in first 15 minutes. So stock has to be up from the opening price, okay? So it's not like a C minus C1, it is C minus O. So here, You're looking at C minus O. That means what you're saying is stock from the opening print, whatever is the opening price has to be up greater than $3. Okay. And at that time, at that 15th minute time, the volume should be higher than 300K. Okay. Now, once you find a candidate like that, then on 5 minutes, you wait for it to form a anticipation setup. So it forms an anticipation setup, which is like very classical anticipation setup kind of a thing, where it has a very narrow range days. Might be very difficult to find in current market, or maybe impossible to find probably, but let's see if we can find something like that. So this is the closest I can find, but like it's not really the best example because, but here you still see that look, and by this time in the first 5 minutes the stock was up for $1.33. So by this time, by 15 minutes, approximately it was 100,000. So it may not meet your 300K definition. So let's see something like Philips K was up how much? Finding something like that in this market is like, I don't think it's going to be very easy, but it's impossible to find something like that in this market. So, but like say, let's say this is a better example. Okay, so this stock is up $6 in the first minute, and then like if the volume was there and it was 300K plus, then you wait for it to set up as anticipation setup, and then buy when it breaks out of that anticipation setup on a 5-minute chart. That's your second best strategy. Okay, this is less stressful. This is like not as this thing as you're avoiding the chop first 15-20 minutes, so your risk is slightly lower. You're going to get close stops, and then once that happens, you basically enter that stock. But here is the trick to this. Okay, you should do this on the first consolidation. Okay, if you try and trade this at 1 o'clock, 2 o'clock, 3 o'clock, you're not going to be very successful. It has to be traded at first consolidation or at best second consolidation. After that, it's not going to work. Okay. I'm talking like around 200 stocks, but like if you do 1,000, then obviously the opportunity, the size of those will be 300 to 1,200 kind of a thing. I'm just taking an extreme example, so that will be 100 shares kind of a thing. Is it a good idea in the beginning to only trade a bunch of tickers like Roku, Nvidia, Tesla, Netflix? That's what I'm doing basically because it allows you to. Yeah, 0.17, 11. Yes, Illumina had like some setups. It's like it's possible. There's a better example basically of like this thing, but let's look at I11. 15 minutes. I don't like this I11 because for something like anticipation to work, you don't want candle like this. What you want to see is like something like this, where there's a continuation buying, and unfortunately, the stock only had this one very small this thing. You want a continuation, 3-4 candles, and then going sideways, and then setting up kind of a thing. This Illumina is bad because of this immediate sell-off, like because you had like $4.05. So I don't like that. You want something like this. First leg sets up nicely, and then instead of breaking to the upside, it actually broke down. But like if this was a breakout from here, then that's what you're looking for. Okay. So always try and see something like this where like from the first candle it keeps going, then hardly corrects, and then sets up nicely. That's what you're looking for. In a normal market, that trade works well. In a very volatile market, it's very difficult to find good ideas like that. So in current market, do not trade that kind of a setup. What is the TI-30? I do use TI-30 basically more because, see, the biggest opportunity in the market or the stock which is in play currently is TVIX. Yeah. So there is nothing else in the market which I'm interested in but trading TVIX currently. Okay. So similarly, some days ago, there was nothing else worth trading in the market but Tesla, because it was the thing which was the game in the market, like that is, or like say a few weeks ago or just some months ago, this was the play in the market where you could make big money. So that's why I'm not trading other strategies, because there is no point in going and just going after something else when you can just make money on things like big stock like TVIX or Tesla. So that's what it is. Okay. So that's as far as this is concerned. If you have PDT kind of a problem, then I would suggest that go into the brokers which are outside, incorporated outside US. There are a bunch of brokers based in Caribbean countries or stuff like that. I'm not sure what are the names of them, but there are a bunch of these which people use. The other option, which is one of my slides, is trading options. There's a very popular day trading options have become extremely popular nowadays. It's like, especially with the weekly options. So it's young trend, yes, I see. Can you keep showing some more examples of TI-30 setups despite not the time now? TI-35 is like, there is nothing to show. It's just like, you just have to sit there and watch what hits the TI-30 screen in the first 1 minute, and then just like buy and then hope and pray. Sure traders, yeah, is one of them, and yeah. But I would say if you have a smaller account, like instead of going and doing that, do options. Options has become very popular for day trading currently. So here is what I would summarize this entire conversation at the end of this hour as first. DT refers to day trading, okay? No, anything which I write here, DT is day trading, okay? Okay, trading gaps like especially 20% plus works best on a bearish side. Bearish means like the gap has to be on the downside. It's not the best play on the upside, like yes, trading that is, but like if you want to really buy really at the open, then it has to be on the bearish side, because there is an edge, significant edge doing this on the bearish side than on the bullish side. Okay, and minor gaps, up, fade. Okay.
How do you accidentally do that? Were you putting exclamation?
I was gonna do something else.
Okay. Fed big earning plays.
No?
So Fed big earnings play. This is working out as a very good trade nowadays. What happens? There is an people get very excited, and then they buy and they start claiming this is going to the sky. And first half an hour it goes up and then it fades, and this is becoming very very popular play amongst many players nowadays because just the reason that many earnings plays they gap up so much that rest of the day they just like in a Shopify is another example of that. So think Fed, always like in a think Fed as like your primary way of thinking when you're looking at day trading. Short trader has closed down as of last November. So those are some of the risks. I would say that if you have a smaller account, those are some of the problems which you're going to encounter. So that is as far as the main money-making play in the market is. We'll look at some of the sub-plays or smaller plays or less attractive plays or things which you can also do as a day trading. Okay. That's gaps. That's like, where are my notes? 1, 2, 3 pages. Where is page number 4? One page down. Okay. Scan-based day trades. There are a lot of softwares which can allow you to scan the market and find some patterns. And some of them work, some of them don't work. Most of these tools cost a lot of money. So only buy these tools if you know how to use them, or if you feel that you're going to make significant amount of money using these kind of trading tools. So here, you're not doing the things like news or anything. What you're doing is you're just running a bunch of scans, and then when something shows up in your scan based on what your logic you decided, then you take a trade based on that. Okay. So the tools, there are a lot of tools in this. Trade ideas is one, but it's not the only player. There are like n number of tools which are available, and almost every one of those tools is going to set you back by at least $800 to $1,000. Some of them are like upwards of $3,000, $5,000. Okay, so scan based, number one idea, TI30, which is Trade Ideas 30, which is what I designed, right? So in Trade Ideas 30, what I'm looking for is a stock which makes 40 new highs in less than, say, a minute or something, right? And there is no minute parameter in that scan. Try and understand. It's like the stock has to make a 40 new high, right? Kind of a thing. So sometime it makes in a minute, sometime it takes 2-3 minutes to make basically. So that's the thing which is there. TI30. The market is closed, so it's very difficult to show you TI30, but I bumped one post, one video here. This should be, what is the video I bumped? Did I bump it or no? Okay, here. So this is like how it works. So in this particular video, I think, and it might. There's no sound on this video, or sound is not important because it's like just not what it is. Okay, what I'm showing you in this video is basically when the market opens, this is the scan TI30. Okay, you'll see that some stock will show up, and that stock I traded that day, and I made money. Okay, so I don't know what time it is on this time. So it starts somewhere like I don't know what. Just play it like so for a few minutes to see. So there is still 2 minutes on this. So I'm just going to forward it a little bit like to see. It's 9:24:25. There's still time here. Just okay. Okay. Let's go here. Okay, so now watch like what happens here, how the magic happens, and so watch these two windows basically. So the market is open now, okay? So it's 9:30 a.m. You'll see something will show up in these windows. And once it shows up, so you saw the stock, I saw it and I shorted it immediately. See? So let me pause it now here, this one, okay? If you see, the stock has already made 100 new lows. And what time did it hit your screen, like in terms of like the immediately, if you see like as soon as the market opened, so let's see, this is 9:30 now, 9:30.0 seconds, and see when does it hit the screen. Let's start the video. Okay, so the market has opened. You saw something happening here, and we both started here. So let's stop here. So as you can see, 9:30 and 10 seconds, the stock showed up. And I don't remember what time I shorted, but I shorted somewhere. And that time, at 9:30, 10 seconds, it had already made a 40 new lows. So that's like, you can see, and then it just like went crazy to the downside, right? So this is something which is called TI30, which is trade ideas 30. And the first 30 minutes trading, in the first 30 minutes, you'll see 100 new lows, right? So, and it kept going down. So, and then second stock showed up, and there's nothing on the long side here, but like the second stock. So I try to enter the first stock to show up or second stock to show up, and which dominated the screen, like this particular thing dominated. Just to give you an idea, that's what is there. I don't remember exactly how much money I made, but a bunch of money was made. Definitely, I think if I can remember, I don't. It's a long time ago that trade happened, so I'm not sure where it is. Like, I don't remember, but like obviously you can see from the video that like that particular thing went down some $2 or something in just like in a couple of minutes. So that's the thing. That's like making money on the steroids kind of a thing. Okay, so that's TI-30, and it can be bullish or bearish as soon as like a scan hits. Uh, I didn't check I don't need to check the scan for that. Like, you just buy or sell. Okay. Uh, how do you know when to exit? You just like basically exit once you make enough profit, right? And once you make enough, I think it was that day. I don't remember which day it was, but like that stock was down $9 that day. Yeah, after gapping down, and it kept going down. Okay. So this is called like basically, and there are a bunch of things on the TI-30. It's not something which has been around for many years. I've been talking about TI-30 for many years. So this is one strategy which can be done using scanners. Okay, obviously the one which I discussed earlier, which is $3, 300K is another one which is based on scan. So you run the scan, look at like another chart, and then get into kind of okay. Why does it turn green on new lows? Why do you think it turns green on new lows? Obviously, if you're looking at fading, then when stock is making a new low, that is a signal, that is a long signal, that's not a short signal, because like that is telling you there's a climactic selling which is happening. So this is likely to be the Fed time. So it's exhaustion, exactly, okay? How sure short is success rate in TI-30 under like somebody like me who's been doing it for many days, many months and things like that. It is high, but like if you're going to be starting, it's not really necessarily like you're going to get like there is a lot of like, it's an art basically. If that particular stock had not dominated and it was just coming for 4-5, I would not have shorted. But the success in that is speed. This is like speed. Okay. Hundreds, many times, like, and I have posted many times that TI-30 trades. I stopped posting because it like, and I just a bunch of people say it depresses them. So, but like, that's a trade which works like, it's like, that's the whiskey strategy to make whiskey in the first, and then I used to trade it only in the first half an hour and then done for the day kind of thing. No looking at chart, okay? In order to trade this, you just trade based of scanner. That's why I said these are all scan based. Nothing in the chart is going to show you what to do in that. Either you are in or you are not in that trading, okay? So let's look at TI multi-strategy. In the TI multi-strategy, again, let's see the same video because TI yeah, how to make trade. So if you see the same video, this is multi-strategy, okay? So it's a bunch of strategies which are like in one window basically. So if you see something coming in here, then like based on that also I trade many times and I also make money based on that. And to see it during the day, I'm just going to forward this to like after the market opens. So after the market opens, you can see like a bunch of things which are showing up here. And it keeps on going throughout the day. There are basically it allows you to find climactic reversals or stocks which are getting sold very aggressively or being bought very aggressively, kind of things like say Sina showed up there then and things like that. On that particular day, I don't know if there is any long showed up. I have no idea. I didn't see this video before showing it, but multi-strategy window also I find trades using that. A lot of time, if I'm paying attention, here like Walmart shows up now. That's at 9:31. Obviously, say 9:31, it makes 14 UI. Walmart is a NYSE stock, so it might have opened a little bit late, but like see, and here you will see that the WB kept on going, Sina kept on going on that day. And so this is all scanner based. So you run the scan and you make money by taking trades of the scans. Okay. Multi-strategy is like, let's see here, again, like bunch of stocks are keep showing here. Weibo has made 132 new lows. So if you shorted right at that thing, it kept on going down. Okay. I don't need that description. I have like, I really don't need that description. So I just know what these things. I just need the tickers. Like this description is, it's like not really important. So here is the thing at. Let's see. So if I close this, go here and look at TI and multi-strategy. Okay. This is how, obviously the market is closed, so you're not looking at it, but it's a bunch of strategies which you put in one window so that you don't look at 3, 4 or 5 windows basically. And then the speed at which they come in is what you use to decide which one is to take, kind of thing. This is all like kind of basically very okay. So this is all based on scanning. Okay, TI multi-strategy, again, scanning. Basically, if you're going to use any kind of scanning kind of a tool, then look for like climactic buying, whichever way you're looking at it. So if there is a climactic buying, like a lot of buying happening in a short period of time, then you fade that or wait, put that trade and watch for a fade. Similarly, if there is a climactic selling, then that's fade, right? And so what should you be scanning for if you're looking for intraday opportunities is basically looking for things which are being bought very aggressively or things which are being sold very aggressively. And that's how you make money basically, right? So that's very easy kind of a thing. So let me take all the questions related to this. And then there are a bunch of strategies which are possible in TI-30. I don't use any of them because I just believe based on what I studied and the market structure which I explained to you, that the best way to trade day trade is to like either do fade of climactic buying or climactic selling, or do the first 30 seconds, like in the first whatever has extremely high momentum. That's like a trade which works very well. The speed at which you can make money is like unbelievable if it works, and if it doesn't work also, like then you can lose. Can you look, discuss stops and exit in something like TI-30? My stop is 40 cents. I would not, unless it's like a $300 kind of a stock where I'll take $3 or something. Standard stops which I will use for any of the TI-30 kind of trade will be 40 cents. I don't want to take a trade where my stop is more than 40 cents. So it's very simple maths. 40 cents is half whiskey. So multiples of 40 cents is what I'm looking at on those things. Okay. Sometimes if it is higher price, it will be $3. Then I'll drop the price. So I do 40 cents on 1,000 shares. So that's $400 is the risk. Okay. Exit is like based on like how quickly it moves in my direction. So if it goes up $800, $1,200, $1,300, by the time you can like put in stop and all, many times it goes up $3, $4 also. So then you just exit and not really do many complicated things. I might exit like 50% of the position or 25% and then keep something. yeah, what is happening, climactic move up and down and all those things. You can look at the strategies are climactic down reversal, climactic down move, climactic up move, post market high, pre-market high, down 50 cents or more in last 5 minutes and big volume spike. So again, why do we do this? Because that's a bullish strategy, right? And if it is down 50% or more in the last 5 minutes on a big volume spike, then at some stage, it's likely to fade. So that's the thing which you really do it. And I did this many years ago. I not really updated the scan, but it works very well. You can always update it if you want, and add bunch of strategies. There are a bunch of strategies available. Many people have 2-3 monitors I've seen full of TI windows. I just use simple things. Idea is to get in as early as possible. So the profit target is a function of risk. So if I can get $800, I'm very happy. 40 cents typically. And because of the speed at which these things happen, the stop is basically doesn't get hit. If it is going to make that kind of a thing, if you see this video again, you will see that, do you think that the stop is ever going to be hit in that kind of a situation? Because so here, let's go and look at the exact price which it shows up. Okay. Here, when it shows up, okay, so it showed up at 44.06, but look at how quickly it is going in that direction. So if you sell it at 44.90 or whatever price, it's already you're already in profit of 40 cents, 50 cents. And the stop was never in play because this is the magic of this scan. Okay. I don't know who did it. Some guy on the internet made this scan, but in just less than 35 seconds, 35 means in less than 5 minutes, the stock was 70 cents. And then again, it kept going down. And in fact, and it was down even more. And rest of the day, if you see this thing, you'll keep saying that, the stock kept going down and hit multiple times. And see here by now, the stock is where see here, it's now 43.56 and I recorded the first 15 minutes for people to see here and see here now. WIBO is at 43.23. Your stop is never in play. That's the beauty of this thing when it works. And if it doesn't work, you're out with half a whiskey, loss of half a whiskey. So in that case, what you do is you take a bottle of whiskey, put it in 2 whiskey bottles and dilute it to make 1 whiskey. See here, it's already down so much. So that's how it operates. So these are all basically the scans which you can create to find opportunities. Okay. In order to be successful trading this, execution is key. The scans are not very difficult. You can just take the link from me and the scans will be set up for you. But if you cannot execute, you will not make money. Execution is really the most important thing in this basically. If I don't do anything, I don't do any swing trading, anything. If I just do this, it's more than enough for me, basically. Yeah, it means the trade which I showed was short. So does it work on TI on short side? That the WIBO trade, WB trade was short. So it's it's not. how useful it is during the day. During the day, you have to trade it differently. If you see something, then you have to just go and see a fading opportunity rather than going in the direction. The real money in this is in the first 5 minutes. If you can enter, find something and enter in 5 minutes. Okay. First 30 minutes. That's really where the money is. 1,000 shares for 40K is for what level of account value? Few 100,000. The account size is 300K basically, was at that time 300K. So it's not scalable, like in the sense you can't do 5,000 shares, is what I'll tell you. It is possible in some trade, but like it will not be possible to do to 5,000. So it's the number of trades which you do is important, right? And it's not really the size of the trade which is important. Okay. So this is like there are a bunch of videos on this. You can look at it. I have like a bunch of videos on TI-30 somewhere. There'll be like it may not be under trade ideas only, but so here is one which is like a Roku on first 10 minutes. So it's a bunch of things I'm not going to show you the entire video, but suffice it to say that if you want to make money, TI-30. Scanning based method if you're looking at, if you're lazy, who just wants to get up at 9:20 and just sit in front of computer and mint money, then TI-30. Obviously it's not easy, okay? None of this is easy. Okay. TI-30 in pre-market, yeah, you can enter, but TI-30 is not going to show up in pre-market. It is only after the 9:30 it shows up. So there is no TI-30 scan only works after the market opens. TI is not the brokerage. It is just a scanning software. Costs you around $1,000. Okay. So that's trade ideas. As far as there is no change in my trade ideas scans, so it is the same. So there is the old link is the same as the new link. Okay. So there is no new link. So this is based on all this is based on scanning based during intraday. Okay. And so if I don't do anything, I can just run TI scans and also make money. So any questions on this? There'll be periodic sales on TI, just like in last week only, I think, or a couple of weeks ago, there was a sale where they give you 25% off. So you'll end up getting it at 750 kind of thing. But I would say that before you buy anything which is worth $750,000, make sure that you are very confident that you can make $75,000 using that tool. Because a bunch of people can have TI, but they don't know what to do with it. So it just is of no use because does the TI work on short size? My friend, what did I tell you? What did I show you just now? I showed you a video of Weibo where I shorted that stock. Okay, and that day, this is the day. This is where you will see that this is the day. Okay, the stock from that opening print was down around $2.26. Okay, so that is short. It is not long. Okay, TI-30 is a long or short strategy. It works on both sides, not only on the long things. Okay, so that's shorted WV. So this is as far as scanning based kind of a data reading strategies are. Okay, so that my card is over. Let's try new topic on data reading. And the new topic is your favorite thing,